Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys. Let's take a look on the Forex market. Today I think that we could take a look at the Great British Pound because it's a Bank of England meeting. We've got the recently inflation data in the United Kingdom, and we have to acknowledge that United Kingdom, the first country who returns to inflation level of the 2% among all J7 countries. And here is really a big challenge stands because Bank of England has to make the decision concerning the rate. European Union Central Bank has already cut the rate, so formally they also has ability to do this. But of course, in general, the rate policy should be agreed with among the major central banks, and they will not act voluntarily. So it's probably should be some plan and probably exist. And from that standpoint of view, this is really something to watch for and be careful and stay focused on what will be said on the press conference on the Bank of England meeting. Speaking about technical picture, here's a few vital moments on the Great British Pound. First of all, if you take a look at more or less large picture, this top is extremely important, because this is the key to major bearish context on the Great British Pound. As on the euro currency, as on the Great British Pound, this is the top of the quarterly bearish grabber. So this actually stuff to the downside. All swing is the body of this candle on the 3-month chart. So you could take a look at it by yourself. And this is actually a huge bearish grabber that we have. Correspondingly, if market will challenge the stop, and especially if it will jump above this 131 area, this will totally erase the bearish context, and potentially we could get significantly higher standing targets with these kind of the big butterfly, right? So that's what actually we have on the table for a really big picture. The same story stands right now on euro currency, but you understand that European Union and United Kingdom economies are different, and it has its own driving factors. In a shorter term perspective, we have, first of all, moving to the one step downward, we have this huge triangle is forming on the weekly daily chart. Potentially, this should be bullish triangle, just because we have upward action, and after upward action, we have forming of the triangle. Usually, it indicates some consolidation before upward continuation. But this is also a big story. Here we're mostly interested with the performance inside of this triangle, in particular what will happen within a few weeks. And from that standpoint, I would be watching for kind of the reverse head and shoulders pattern by the few reasons. First of all, this reverse head and shoulders might be a really great trading setup by itself, so it's might be a really great opportunity for taking the positions. And an area between 25-26 is the one where we should be careful and watch for possible reversal patterns on the lower time frame. So even the falling time frame chart, we will start getting here some butterflies and shoulders as usual. So maybe it makes sense to consider. Another reason why these hand shoulders might be important is, you know, from the classical technical analysis school, that if market shows upside reversal prior it reaches the opposite border of the consolidation, it always treats as a bullish sign. So if market is going not directly to the downward to the lower border, but stops in the middle and reversed up, this is always treated as a bullish sign. So it might become the first sign of the coming breakout. And particular in this point, we should get the bottom of the right arm. So that's why it's important. So well, that's what about the hand shoulders. Meantime, currently on the daily chart, since market not at some strong support here, still some way to go to this area, we have a bearish context because trend stands bearish, market is not at the result, we do not have any bullish directional patterns here. So it means that here we could get some downward continuation. It's difficult to say something definite at the eve of the Bank of England meeting, but still, that's what we have currently from the technical picture. On the lower time frame, on the 4 time frame chart, this might be kind of the hand and shoulders. Here is of course not really absolutely good hand shoulders in terms of the shape, right? So it's not perfect, but some kind of we could recognize here. Besides, here's we have some bearish reversal swing to the downside with some thrust action here. This market has shown downside reversal swing greater than the previous swing up, which is potentially bearish, and with some retracement back to the area around 2780 maybe. This might be the point where market then could trying to turn to downside direction. That's what we could keep an eye on the 4 time frame chart. Correspondingly, on the hourly chart, upside extensions that we have points on the XOP around 127.60. This is slightly below than 27.80 that we have here, but very close, so we could say that some kind of the agreement with this level. So depending on your trading time frame, where you're trading at, you could choose particular pattern that you could follow. For instance, if you trade on a weekly and daily basis, weekly trend stands bullish, and here you could keep watching for hand and shoulders. So waiting for the market to reach the approximately an area that we have specified, then drop your time frame, start searching for patterns for taking the long position, dealing with this hand shoulders pattern. Also, this pattern is interesting in terms of the possible failure. As you know, the failure of the hand shoulders is also great signal suggesting drop below the 123 area and possible downside breakout of this consolidation. So it means that the major grabber that we have on the quarterly chart might start working, so we could get great A, B, C top downside D pattern. So you can see how really important bet stands on the table right now, because whatever direction breakout will happen, the potential continuation might be really significant. If you trade on lower time frame, so your context will be bearish, and you could watch for example, for this pattern 27.8, 27.60 area, where you potentially could consider taking the short position. So that in towards what we have, but definitely the Bank of England meeting and following press conference will bring some adjustments. So I prefer to not take this risk. I prefer to act after big events will happen, and but this is my choice. It's just more comfortable. And then you could take a look once again on the picture that we have after the meeting, and if everything, all stops still stands in place, just choose what you like more and just trying to keep following it. Speaking about the euro currency, well guys, markets just returning back to activity after the holidays. On the euro currency, we do not see big changes. So yesterday we have some minor continuation back to the XOP. Now we have the retracement that we discussed yesterday. So nothing special. Just keep watching and following the same trading plan that we have. If you remember, the weekly bullish grabber stands in place. We already have taken long positions here, and all things that we could do is just see on reaction what will happen next, whether the market will be able to proceed with this pattern or not.